Welcome to the Startup Espresso. I'm Hall T. Martin, the host of the show, where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. Each stage of funding brings a different set of investors. Here's a list of investors to pursue by stage. Pre-seed. Founders fund their initial startup research and market development. It's too soon to take outside funding for what is not yet a formed business plan. Seed. Family and friends and closely known angel investors. Outside funding can begin once the market is understood and the customer is defined. Seed plus. Angel investors and early stage venture capital investors. There's often another round of funding at the previous valuation to complete the product. Series A. Venture capital and late stage angel investors. Institutional capital comes into play at this stage. Series B. Later stage venture capital and growth equity investors. Later stage venture capital carries the startup into scaling. Series C. Mezzanine debt and growth equity investors. Debt investors as well as growth equity investors come into play here. IPO. Pre-IPO investors fund the IPO. This usually starts 2 years in advance of going public. Pursue these metrics at each stage of funding. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start listening to today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.